Yeah. So, the company really operated basically on a break-even model a lot of years. I mean, we were in the 0 to 3% profit range most years, and generally breaking even. And, we're not a perfect operation yet. We have a lot of work ahead of us, but we've come into that 10% profit range where it's the minimum acceptable in today's company that, we accept nothing less. The expectation is, we are going to, get into the 12-15% range, tomorrow. I mean, it's not starting now. And yeah, the P&L is absolutely essential. And you have to think of it as your management, a management tool for running your company. And as you were saying, it does tell you where to look. It does tell you where to focus your energy. And the caveat that, I've been sharing, with other people in the mastermind who are where I am today, or a little bit behind where I am today, who are going into that growth mode, is that it's easy to invest and spend all this money and kind of lose control of the reins of what's going on in your company. And it's a really dangerous territory. And that's where we found ourselves about a year and a half ago, before we were dialed in on our financials, where, okay, I'm adding the CRM and I'm adding these new systems and I'm hiring a new person for my call center. And of course, all this stuff costs money. So, I better raise my prices a little bit. But I didn't understand our pricing model. I didn't understand the margins that we needed. I didn't understand what our break-even point had become. And without doing that deep dive into our financials and understanding how much gross margin we really need to run our company, I mean, we could have gone under pretty easily.
Mm-hmm.
Because we were outspending what we were bringing in terms of gross margin to run the company, and I didn't know it, and I had to take on the project of understanding our financials and redoing our P&L, and ultimately raising prices yet again to make sure we were building the right profit model for the company to stay on track. And it was a really precarious place we were in, and I had no idea.
Yeah. Well, look, what you did going from, break even essentially to 10 and now next 12, 15 is extraordinary, because it's, a lot of people, that's the last place they'll go. They'll just say, well, let's just keep selling more. And with you, to your credit, you understood, hey, just selling more is not the answer here. I got to understand what the hell this document is telling me. I mean, arguably, that is, as entrepreneurs, that is our most important scorecard. I mean, we talk about scorecards and accountability. We'll hold our salespeople accountable, but do we hold for their sales and for their close rate, for their NSLI? But then will we hold ourselves accountable to our P&L, to what that's telling us? And if it's telling you anything less than 10%, one, I hate to say it, but you're doing it wrong. One, but even worse, all of that work that you're doing, all of that, the stress of the company before when you said the phone would ring, but everybody's phone would ring, and the chaos that would create. And it's like, for all of the work that we do, don't you deserve to earn a profit on that? And so many people have a hard time with that. It's like, yes, of course you deserve to make a profit. You're doing right by your customer. That is your reward. And so you very smartly understood the relationship with pricing and gross margin and the impact gross margin has on your profitability.